Welcome to NextGen Investors, where future meets fact. Today we are going deep into an exciting topic that's catching the attention of every Indian investor. NSDL versus CDSL, a stock market comparison, and NSDL's upcoming IPO in 2025. Should you apply for it? Which one is better for long-term wealth building? Let's break it down. What are NSDL and CDSL? Both NSDL and CDSL are India's only two major depository institutions, the digital backbone of stock investing. But remember, today's video is not about how they work, it's about them as businesses and investments. NSDL, National Securities Depository Ltd., the older and larger by value of assets under custody. CDSL, Central Depository Services Ltd., the younger one, but listed and widely held. Until now, only CDSL was listed, but in July 2025, NSDL is finally launching its IPO. Let's compare the two from an investor's lens. Business model, how they make money. Both depositories earn through annual issuer charges, account maintenance charges, settlement charges, corporate action processing fees, e-services like e-voting, eKYC, etc. But CDSL often shows better profit margins due to its focus on high-volume retail accounts and comparatively leaner operations. NSDL also has diversified revenue streams, including banking services. NSDL focuses more on big institutional clients and manages a significantly higher value of assets. CDSL has higher retail client share, especially booming from Zerodha, Grow, Upstocks type accounts. Financial snapshot, CDSL versus NSDL. Let's look at some key financials, as of FY25 or latest available figures from Q4 FY25. CDSL, as of Q4 FY25 and current market data. Market cap, Indian rupee 35,000, Indian rupee 36,000 crore, approximate as of July 2025. PAT FY25, 526 Indian rupees plus crore, estimated annual based on Q4 FY25 results showing 100.31 crore Indian rupees. ROE, 28%, remains strong. Debt-free. Listed since 2017. Strong dividend-paying history, e.g., 19 Indian rupees regular plus 3 Indian rupees special dividend in FY24, 1:1 bonus issue in August 2024. NSDL, as of FY25 and recent IPO news. FY25 PAT, Indian rupee 343 crore, reported consolidated net profit for FY25. IPO coming in July 2025, listing by July 31, 2025, per SEBI extension. Valuation expected between 14,000 to 16,000 Indian rupees crore, unlisted market cap was higher, but IPO range is expected lower, around 750 to 800 Indian rupees per share. ROE, 20%, reported for FY25. Debt-free. Backed by institutions like NSE, IDBI Bank, Union Bank, etc. So purely on profitability, CDSL currently leads. But NSDL's IPO price and growth plan will be key. User base and market position. As of mid-2025, CDSL now handles over 15.5 crore demat accounts, majority retail. NSDL handles around 4 crore accounts, as of May-June 2025, but higher value, mainly institutional. CDSL has higher volume of accounts, NSDL has higher value of assets under custody. CDSL is growing faster in terms of new accounts due to India's retail investment boom. This also affects their revenues, and CDSL is consistently gaining market share in terms of new account additions. Growth potential in the depository business. Both NSDL and CDSL benefit from rising demat accounts, mutual fund penetration, new IPOs and ETF listings, government push for digitization, introduction of T+0/instant settlement systems, gift city developments. According to estimates, demat account numbers in India could cross 19 to 20 crore by end of 2025, already at 19.4 crore as of July 2025, and potentially much higher by 2030. This gives a huge runway for both companies. NSDL IPO details. IPO expected in July 2025, with listing tentatively by July 30, 2025. Size, Indian rupee 400 crore, reduced from initial estimates, likely offer for sale. Pure offer for sale, OFS, funds won't go to NSDL, only to selling shareholders, IDBI Bank, NSE, Union Bank of India reducing their stakes to comply with SEBI norms. Price band likely to be in the 750 to 800 Indian rupees per share range, as speculated in unlisted market and reports. Retail quota expected, 35%. Important to wait for the final RHP red herring prospectus or offer documents before taking action. Stock versus stock, which is better? CDSL is already a proven compounding machine, debt-free, consistent dividends, high retail growth, and strong profit margins. It's a listed entity with a clear track record. NSDL is the more premium player by assets under custody, but its performance as a listed entity is yet to be seen. Its reward potential will heavily depend on the final IPO valuation and its post-listing growth plans. If NSDL comes at a reasonable PE, say 25 or 30x on its post-IPO valuation relative to FY25 EPS, and shows clear plans for expansion beyond its institutional base, it could become a great long-term bet. But if it's overpriced, CDSL remains the better value pick for now due to its established market position in the booming retail segment and attractive profitability. Conclusion: what should you do? If you're a retail investor, keep CDSL in your long-term watchlist or portfolio, especially given its strong retail growth. Carefully study NSDL's IPO once the final RHP, price band, and valuation come out. Don't rush into it based on hype. Don't get excited by just the name, focus on valuation and growth potential. Both companies will benefit immensely from India's capital market growth, so long-term, this is a strong sector. Thanks for watching NextGen Investors, where we bring the best investing ideas straight to you. Like, share and subscribe. Hit the bell icon for future videos. Comment below, will you apply for the NSDL IPO? Watch our other videos on IPO reviews, ATF picks, and fundamental analysis. Disclaimer: this video is for educational purposes only and does not constitute financial advice. Please consult your financial advisor before making any investment decisions. Stock market investments are subject to market risks. Do your own research.